The most common valuation mistakes we come across. If you're interested in this area, follow my video. This one is going to be for you. Hi, I'm Michael from MDH Accountants and Business Growth Advisors. If you enjoyed this video, click the bell and subscribe to make sure you don't miss out on any further content and our tips and tricks. So valuations can be an absolute nightmare. How many times have you come across someone that's valued a company that's really high or really low and it's not even close? I'm going to talk in this video about the most common problems when it comes to valuation. Number one is outdated financial data. So your bookkeeping, your Xero, your QuickBooks, and all your accounts you believe are right, but they're just out of date, or if they're just wrong. Now, what can happen with this is it's quite common for sometimes an accountant to come in and mop it all up at the year end to make sure all the balances agree, so the accounts agree, but during the year, this does you no favours at all. So if you're using on mid-year data that's not good enough, you're making valuation decisions that are just gonna be completely wrong. Incorrect debt levels. So you may have an idea of what you thought your debt was in the business, and some of that could have been paid down via capital repayments. Or your accounting system's not up to date, you've got another one or two loans on there that could be quite significant or quite small. You've calculated the debt level and it is completely wrong. That's going to affect your valuation, and that's going to affect what you're expecting to get in your hand or what you're expecting to see at the end of this exercise. Again, this is another big shout out for bookkeeping. Make sure everything is updated throughout the year so you've got an accurate reflection of what your balance sheet is like at that given time, and also how much debt is actually due, is repayable by the business. Cash levels, operating cash and runway. Now, we all know a lot of small businesses run on a shoestring. It's really tight, and most small businesses are massively undercapitalized. But when you're actually valuing a business, it's really keen to understand is what is the operating cycle for cash, and also how much runway do you have in your business? Because we all know if you starve the business of cash, you could potentially have mutiny on your hands if you're not paying people. But also it's massively important because if someone's looking to buy your business by using this valuation, they need to know if they need to prop up your business with extra cash to make sure that you've got the appropriate runway and the appropriate balance so you can trade without it all being a massive pain. Misapplying valuation metrics. So this can happen in a few different ways. It could be whether you've got an income and EBITDA metric. If you're using the wrong metrics or using a too big a driver, let's say that you've got really excited and you've used 8 times EBITDA when the valuations are pretty much selling at 4 times EBITDA, your valuation is going to come out at half. How much is that going to punch you in the face when you realise that the valuation that you're going to get from your business or potentially sell it or whatever you're looking to do as part of this exercise is going to be under half? So make sure that you've got a really good understanding of the metrics that are in your industry and also what is selling currently at the minute for the appropriate size and how well the business is formed, to make sure you don't fall into this trap of using the wrong multiple. Failing to adjust for risk. Every business is attack at risk in some form or way. So you can either get that your product is at the end of its cycle. Classic for this is Blockbuster and Kodak. So they may have made a ginormous amount of profit in the past, done really, really well, but DVDs and VHSs are gone. People aren't going to go down the shop, they're going to stream. Over, bang. What you've also got to make sure is the risk of your business where you've got a load of people coming into the market. You may also have government that may actually do changes where the changes to the legislation is going to put you at massive risk. Minimum wage for retail and also hospitality is a big factor in the current market. So when you're looking at valuation, you need to give adequate consideration that you are factoring the right risk level, so you're understanding that the valuation is supported with the level of risk that you've given it. Make sure that you give this adequate consideration because most people don't. Overlooking intangible assets. This is really common, so you'll have a lot of stuff that's implied. You may have a website, so you need to make the website will be actually transfer into your own name and it's owned by the business that you're buying. And also if a subcontractor has prepared that website, you need to make sure that they transfer ownership over to you. Understanding all of the intangibles within your business is where the real value is, because what you want to be able to do is use that and elevate it higher, especially if you're acquiring a business, to make sure that you're then increasing the profits, increasing your future valuation, so the investment that you made is really sound. And again, if you're selling a business, you want to have this on parade, that everything is there and how wonderful it is, because the more you do that as a seller, the more you will increase the valuation of your business. Goodwill assessments. So goodwill assessments is looking at what the actual goodwill in the business will determine on industry, but we also need to make sure that this has got a sound calculation and you're not having to go through a wardrobe into Narnia to actually prove that valuation. It needs to be something that's in line, believable, and also what someone is willing to pay. It's too easy to say that, oh, my business, I've worked on it for 20 years, the goodwill is this. Well, it's not. It's worth this. So make sure that you are giving a really good valuation when it comes to goodwill. If this video spurred any questions, let me see if I can help. Book a video call in with me today. We can talk about you and your business so I can get to understand you. I'll answer all your questions and I'll promise there'll be no pushy sales pitch. So if you are looking to grow your business, click the link below to our business growth program. This is where we break down everything you need to do to grow your business in clear, actionable steps. We'd love to see you on that course today.